What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and a repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and the notification bell. That way you're notified not only when we release our nightly and weekend videos, but our bonus content as well. Make sure you follow us on X at Bullish Chips for real-time updates about our entries and exits for trades. And just a reminder, we're not financial advisors. We don't offer financial advice, but what we do offer is our view of the price action for SOXL, not only in the current day and in the past, but where we think price action is going to take us in the future based off our trading method and our charting method. Just a note on our charting method and trading method, it is based in the strat. It's just the base of our trading and charting strategy. If you want information about this, it's very simple to pick up. You stick with us through the video and you'll have a real good hang of it by the end of the video. But if you want some information, we do provide a link in the description to this video for a free PDF that you can download. Gives you more details about what the strat is. There's basically 3 things a candle can do: be a 1, a 2, or a 3, and there are about 6 main reversals that you can have for the strat with very clear entries and exits. There are also continuation patterns with very clear entries, but then you have to use your own kind of analysis of price action to come up with an exit. But the reversals provide a very specific entry and exit, so that's why they are a favorite of ours to use when trading. Gives real clear targets and points of exit, so you know how much you should be able to make in the trade before you even get in the trade. Also use broadening formations, which is just basically drawing lines from higher highs to higher highs and lows to lower lows. Not only showing where price went and how it's broadening, but it gives you a view of where there's a high percentage chance of price action going in the future. So again, those are the base of our trading method, but we do layer in a couple other things on top of there. One of those things being our 4-hour markers. We'll get into that when we set our triggers and targets for tomorrow. So just how we'll go in today's video, we'll just do a quick recap of today's price action. We'll go through a wide view of SOXL's price action as well, just to make sure that we are calibrated correctly. We're not just zoomed in on a small time frame. We will look at what the market maker's expected move is for this Friday, tomorrow, Friday, August 22nd. And again, we will set our 4-hour markers so that we can have our triggers and targets for intraday trades for tomorrow. So let's go ahead and get into the charts. That's what everybody's here for. Just a recap of price action today. Let's just go ahead and kind of zoom out a little bit and look at it from the day perspective. It was an inside day. So let's go ahead and make this a little bigger so everyone can see. We did have the inside day, and we were looking for the 3, 2 down, 2 up reversal. We didn't get it, so we're not dead smack in the middle of the range, the 8-week range that we've been in, but we're not all the way at the bottom of the range yet to where you would want to enter new calls. Based off of the pattern that we've been in for the last 8 weeks, buying calls at the low of the range and buying puts at the top of the range. So, you got to kind of stay on your toes during intraday. Today was very evidence of that, just whipsaw action above and below opening print. So, let's just get down to the 15 minutes, right? And we've got today. We'll go ahead and bring up our chart with our 4-hour markers, so we can see that today, there we go. Today we had the initial push down, the bounce up. Again, here was our opening print at 25.40. So initial, just push up. I don't want to say push up because it was pretty muted. That wick was very early on. You know how you get some volatile action at open. And then it immediately pushed down. We did capitalize on some puts for the push down. We only let go of half of our position because we were looking for the next target, which was the 4-hour trigger to the downside, triggering the 2 down on the 4-hour in the 4-hour reversal. So we only exited half of our position there. Ended up getting stopped out at even on the rest of our puts that we had. We did capitalize then off of some calls, and not very much profit to be that was made due to the whipsaw action even within here. If we go down to the 5-minute, there were some lower lows violated to knock us out. So you could see it was just up, down, up, up, down, up, down, up, whipsaw action. So didn't have a trending day, but you can see how this last week's low, this 25.45, which again, if you're not familiar with the color coding of some of the lines that we have on our chart, make sure you check out our bonus content for the precision trading video. That'll give you a breakdown of everything we're using, but you should have a pretty good handle of it if you just pay attention in this video. We have the market maker's expected move, the bottom of that move down here at 25 flat. This is the expected move for the week. So although we did go below it yesterday, you can see that price did suck back up into that range, and not necessarily going back to the top of the range or anything like that, but you can see how it's found its, I guess, little home for right now at the bottom of the range. So rejection of overnight low, which pretty much lined up with last week's low, opening print also right there. So tried to get above it at the beginning of the day. We didn't get calls immediately because there were no higher lows, except for maybe on like the 1 minute chart. But again, we got the lower high, two lower highs actually on the 1 minute before the dump. It went down to, again, the expected move for the week. When we did bounce back up, you can see this is another reason why we have our 4-hour markers on the chart. This was the 4-hour trigger to the upside, and we know that with higher lows above opening print, the first target is either the 4-hour trigger to the upside or the previous high a day, whichever comes first, because a lot of times the 4-hour trigger to the upside is the same as the previous high a day. But if they are different, then the 4-hour trigger to the upside is the first target, then your overnight high or your previous high a day, whichever one comes first. So only made it to that first target, so minimal profit there before getting your lower high. And then if you had any runners that you're trying to let run till the further targets, you got stopped out here for even, or if you moved your stops up, whatever they were set at. But in the end, after the volatile action just went sideways, not a lot to do. Kudos if maybe you were using the 1 minute or 5 minute to get scalps here and there, but at a certain point midday, we basically just kind of called it. Not necessarily called it because we continued to watch the charts, but we just said we're gonna let our puts we have September monthlies and November monthlies, let those just kind of cook. If the price action is going to go down, we need price action above opening print to have confidence in getting in any calls due to the resistance that were there. So basically nothing for us to do, and then the end of the day we just basically went sideways and closed where we opened. So zoom out real quick just to take a look at the week, because again we did trigger the 1 2 up 2 down. Let's get these off of here. Right, so we triggered the 1 2 up to down. It has not reached magnitude. Magnitude will be the low of the candle to the left of the 1. So that's the top of the gap here that we have at 22.57. If we do reach magnitude there's no reason that we couldn't expect the gap to be a little bit more of a magnet to make a lower low. Wouldn't be that big of a deal because again we did make a higher high last week, so it would just be creating a broadening formation, just signaling more sideways action, but just giving a bigger range than what we've been in for the last 8 weeks. So again, we're still contending with this monthly downtrend line, this green dash line. Last year's flip continues to be resistance for us. We've poked above it just a couple times, and every time price action has been rejected. So again, if you take a look at the upper left hand part of our chart, we have the time frame continuity indicators, and you can see the week is red, the month is green, the quarter is green, and the year is red, which is plays into it's another reason. It's not the only reason, but it's another reason why we're seeing this sideways action here. A lot of times we want to have at least the week, month, and quarter going in the same direction, especially if we're real close to the year flip, because we know that if we do flip that green, then we're in full time frame continuity. That gives puts the sails at the back, or the wind at the back of the bull's sails, and gives you more confidence for longs looking for these higher highs on the week chart at the very least. If it takes a while and we just ride this weekly broadening formation up to make those higher highs, that's what it does. But we could also just pop through, try and see this gap and this broadening formation before we see any real type of action. But we have to keep in mind seasonality that we're coming into. September, October are not good performing months for tech. They're the worst performing months for tech. So just want to keep that in mind. Let's look at the month. Again, we did go 3, right? So poke 2 down first, and then we got price action back above last month's high. but price action is handily back within last month's trading, and so we're just there's nothing to say let's go long here or let's go short here. We're just moving sideways, so no reason to really stay on these other ones very much longer. Again, the price action for the two up has come back inside last quarter's two down, so that's no longer a two down two up in force. Yes, it has triggered, it did not reach its magnitude. So is this showing a sign of weakness going into the end, the second half of the quarter, which again is September, October, one of our worst performing, or the two worst performing months of the year for tech. Do we fill this gap? Probably. Do we fill this double gap down here and then the further gaps down here? Who knows? But it is something to keep in mind that this is a failed two, and especially if we close a failed two or even a red failed two up, that just gives more to the thought that even in the fourth quarter we may be looking at more downside action for the two up two down reversal, even if that just makes a failed two down to start next year in the first quarter going two up for the two down two up. Who knows? We're not going to predict, but we're just going to respond to how price action goes and have our triggers and targets ready. Again, the year has the 1 2 up 2 down. Let's make this a little bit fatter. 1 2 up 2 down. It did not reach magnitude. It got close, but we're still in that particular strat, not in force yet, because this price action would have to come back below the low of last year. But if that does happen, then we're obviously going to be red on the month and the quarter, and we're going to have full time frame continuity to the downside. Then we're going to really be thinking about puts and selling calls. So that's what we've had for price action today. Let's take a look real quick at the market maker's expected move for tomorrow. To do that, we go to our options chain. This is Thinkorswim that I use. I guess Schwab now owns them, but I still use the Thinkorswim trading platform. And we look at the options chain for this Friday, this week actually, and we can see that the expected move is plus or minus $1.32, right? So what we can do is just mark that on our chart. Let's go to our intraday chart here, and I've already calculated it out. The $1.32 move with the close price of $25.35 puts the high of the expected move for tomorrow at $26.67 and the low at $24.03. So let's just let's mark that it's $26.67. We'll put 8:22 EM high. We'll make it orange for a day indicator, and we can see on the chart we've got that there, and I believe it was 24.03. Yeah, 24.03. All right, we'll call this 8:22 EM low. Make it orange. Okay, so then we've already got charted out, so we should see price action tomorrow. Again, we had some kind of muted price action compared to the last 2 days today. So the expectation of the market makers is that price action should be somewhere within this 24.02 and 26.67. So we just like to have those out there in case we get some type of like gap up situation tomorrow and we're above the 4-hour trigger to the upside. We're above the previous high today. We're above the overnight high. What's another target that we have before maybe this extended target of the week flip? That would be the expected move high at 26.67. Because more often than not the market makers are right. It's about a 30 to 40% chance that price action could go above or below the expected move, but more often than not they're, well, I guess 60 to 70% of the time they're right. And so it's reasonable to expect that price action may stop up here, right? And that kind of coincides with this daily downtrend line that we've got here, this orange dashed line, right? If we kind of make this a little smaller for everybody. There we go. We can see our 4-hour markers. So let's remove today's opening print. All right. And let's go ahead and move our 4-hour markers. That way we can set our triggers and targets for the day. Don't want to hold you guys too long. I know that some of the videos can be a little drawn out because we go pretty far into detail, but you guys let me know in the comments. Do you want me to go into detail on more of the 45-minute to hour-long show, or do you want me to do more of like the 30-minute show? Let me know in the comments. I'll be glad to try and Oops. Trying to accommodate everyone the best I can. So we've moved the 4-hour trigger to the upside to the high of the second 4-hour candle of today, and we've moved the low, the 4-hour trigger to the down to the low of the second 4-hour candle of the day. Just so happens that the high of the second 4-hour candle of today, it lines up with the last week's low, which is this purple short dashed line here. And we've got our previous high day, of course, at today's high, and previous low day, today's low. Expected move for the week is right in here too, but this does show that the day's expected move shows that there is a high probability that we would go below the week's expected move. So again, more often than not, the market makers are right, but sometimes they're a little bit short on their estimations, and that may be the case tomorrow, especially if we go to the downside. So we've got those 4-hour markers out there. If you're not familiar with the strat, check out the information I've provided after this video if you want to learn more. But it should become pretty obvious at this part of the video what those stand for. I'll be talking a little bit about the reversals and continuation patterns, but basically you can see a 1 is an inside candle, a 2 is a candle that has gone either above or below the previous candle, and a 3 is what most people would call a bullish or a bearish engulfing candle, where price action has gone above and below the previous candle, right? This was invented by Rob Smith. I've got information for his YouTube channel out there. There's plenty of information about Rob on the internet as well. So make sure you do your research if this is something that interests you, but it's a very easy way to look at price action. So we'll look at what our reversal would be tomorrow if we go to the downside. Because this is a inside candle, we can have basically a reversal to the upside or downside tomorrow, because we would have to the downside a 2-1-2 down, which gives a very clear entry at the 4-hour trigger to the downside and an exit at the previous low day. Now, would I suggest taking that trade just for that magnitude? No. That's not enough magnitude to make good money. You've also got kind of an area of support here in last week's low. You can see it's kind of caught the price action, and again, it's not a lot of magnitude, not a lot of money to be made there. But what that would do is trigger the 1-2 up combo 2 down, right? Because this 1 and the 2 down would combine to make a 2 down from this candle. And that magnitude I would trade for, because the magnitude of a 1-2 down, 2 up, 2 down, or a 1-2 down, 2 up, either one, the magnitude is the higher the low of the candle to the left of the 1. So since this would be a 1-2 up, 2 down, it would be the low of the candle to the left of the 1, which is all the way down here at the 2360 area, 2366, right? So we'll go ahead and put our notes together here. So right off the bat, you could have a 2-1-2 down. So we'll mark that here, and we already have that, right? 2 down. This was a failed 2 up, so we'll mark this failed 2 up, 1-2 down, which triggers at the 4-hour, the low of the second 4-hour candle of yesterday, which is 2507, and it has a magnitude of the previous low day of 2491. Right, so we can have then, if it goes below previous low day, it triggers the 1-2 up combo 2 down. So we'll go ahead and mark this as a secondary. Oops, I didn't even mark the right. Yeah, I did. 1-2 up combo 2 down, which would also have so the magnitude would be the trigger for that. And the next magnitude for the 1-2 up combo 2 down would be the low of this 2. So that's that 2366. 2366. I don't think we need to put any further extended targets. That is a pretty good move for a 4-hour candle. We do know that we have our lower low at 2257, so we can kind of use that as an extended target if we go past the 2366. But as you'll see here, most often than not, the 4-hour magnitude for a 4-hour reversal many times is the trigger for the day. So let's go ahead and mark that magnitude of the 4-hour as the trigger for the day. So we'll come back to that here in a second. Let's go ahead and mark our triggers and targets to the upside. On the 4-hour, you would have a 2-1-2 up. The 2 up triggering at the high of the second 4-hour candle of today, which is 2545. We got 25.45. Oops. And we got the failed 2 up. Green 1, 2 up. Triggering at 25.45. Magnitude being the high of the day of today, which was 25.90. 25.90. And then we can have some extended targets here of the high of this candle, which was a pretty big movement for the first 4 hours of yesterday, which is 26.11. And we'll leave the 26.68 out there as well. Take away. All right. So we have on the 4 hour, the higher high is up here at 27.86. So we'll make sure we've got that there, 27.86. Again, those higher highs can be sometimes a magnet. So if we do get above that 26.68, that 27.86 could be a target for us. We'll get a little bit better idea once we get down here in the day. But for right now, we've got our trigger to the downside. We've got our magnitude, or our first target, and then we've got our second target for the downside. And that's on the 4 hour chart. This again is our trigger to the upside on the 4 hour chart. We've got our magnitude, magnitude here, and we've got a couple extended targets in case we get to really run in, right? So let's go ahead and switch to the day. All right. And we can see we have here a 2-1. To the downside would be a 2-1-2 reversal with a very clear entry at the low of today and the exit at the low of yesterday. So the 2-1-2 down triggers at the 24.91, which was the magnitude of the 4 hour. Remember that magnitude, 24.91. So that's the trigger here, and that is again a 2 down. Red 1, 2 down, right? That triggers at 24.91, and we have a magnitude of the low of this candle, which is that 23.66, right? Which is the magnitude of, oops, we need the right magnitude here because this is reversal, and that is the magnitude of the 1 combo 2 up, combo 2 down on the 4 hour. So you see how these tie in, right? But these give you a little bit shorter targets. These give you a little bit longer targets from an intraday perspective. Now we can have some extended targets out here. The first would be this lower low on the day. I'm sorry, higher low on the day. So that would be this 22.95. Where are we at? Oh, okay, sorry. 22.95. And you see how that 22.95 again is this lower low. In this case, it's a higher low, but it would make a lower low, creating a broadening formation. So that we like to always have those in our notes. That tells us what would make this broadening formation or make a lower low in this case. And then our next target can be the top of this gap, which is at 22.57. Actually, yeah, 22.57, which again is another lower low. So we got 22.57. Now we can put an extended target as well for the gap close at 21.98. All right, so we've got our triggers, we've got our target, and we've got our extended targets to the downside on the day. Now if something triggers to the upside, oops, let's get this marked right. This would make a 2 down, red 1, 2 up, right? Triggering at the high of today, which is that 25.90, right? Which is the magnitude for the 4 hour. So we put that 25.90 there, and the magnitude of a 2-1-2 up is the high of the 2. So we would see a 26.11 as the magnitude. Now we would definitely want some extended targets because you can see that's about 21 cents of movement. So we have the expected move high here at the 26.67. Oops, 26.67, and the weak flip of 27.10. And just in case we do have some type of like gap and go situation, we've got the 50% of last week, which we saw was resistance and resistance here. So 27.56 will be our final extended target for the upside. Now again, we are in a 1, 2 up, 2 down in force on the week that triggered at 25.45. Remember, we're at 25.35. So the magnitude was 2257, and you can see that we only got down here to this 2366, so there's still room to reach this magnitude. So tomorrow, if we have a red day, that 2257 could be a real level to look for, right? You can see it on, it's an extended target on the day. It's the magnitude on the week, and it also would create a lower high on the, a lower low on the day chart. So there you have it. I hope this video didn't take too much of your time, but we do see what we have out here. Let's go to the day chart. There we go. We do see what we have here. We have the inside day, so an indecisive day today. So just got to stay on your toes. We could easily come back down here and look below this 8-week range once again, possibly doing another look below and fail, or possibly making lower lows and continuing to move down to this lower weekly uptrend line here, right? Or we could put in a 1-2 down on the day, maybe a failed 2 down, and then Monday we may have the 2 up, which triggers the 1-2 down 2 up and takes us back to the top of the range. So again, we can't really call it at this time. We don't have, we've got too many conflicting indicators and movements and levels and whatever you want to call them to say yes, we're going to go long, or yes, we're going to go short here, right? We just want to play what the market gives us tomorrow, and that's what we have in our triggers and targets, right? We're ready for whether we get upside or downside action. So you should be able to make money, especially using those 4-hour markers. Let's go back. We talked about them. We've already moved them for today from yesterday. So if you want a recap of using those 4-hour markers for those intraday scalps and calls, rewind the video to the breakdown from today's price action. But we know that we can use this strategy because it has been proven over the years. It's repeatable, not just on SOXL. You can use it for any stock, but this channel is just dedicated to SOXL. But it's a proven and repeatable strategy. So go ahead and hit the like button if you've made it this far and you enjoyed the video. It helps spread the word about SOXL, right? Again, it's another great ETF to take advantage of, especially from an options perspective. It's a very high beta ETF, so anywhere from 4 to 5, depending on where you're doing your research. So you're going to get that daily volatility. You're going to get that daily movement. It has low premiums on the options. It has very high delta to low theta ratio. So those are a real great recipe for you to be able to make some good money in the market. And even if you're not capitalizing on the 4-hour markers and the intraday moves, because maybe you're not able to look at the charts like that, you can still use this strategy to identify reversals on higher time frames, right? Like on the week, we had the 1, 2 up, 2 down. So as soon as price action this week went below last week's low, you could have bought puts, and you had your exits here at the quarter flip, the month flip, and the gap, right? So again, we're not done with the week. It could continue the strat down, but this strategy can be used on the week perspective. You can use it on the month perspective. We talked about how this went 2 down first, 3 now, quarter. It doesn't matter. So I just want to help everyone trade a little bit better, make it a little bit easier without having a whole bunch of indicators on the charts. A few major levels, and you should be set to go to make good money. Don't overcomplicate things. That's not what this should be about. So if you like the video, give it a thumbs up, help spread the word, and hope everyone gets some good rest tonight, and I wish everyone good luck in tomorrow's trading.